Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 169, published on July 31st, 2026, titled July 2026 Sustainable Stock and ETF Picks. Now, before I begin, I want to apologize if my voice at any time sounds a little rough, and for any construction noise you might hear that's been going on outside my area here. Okay, so this podcast is presented by Investing for the Soul. InvestingfortheSoul.com is your go-to site for vital global, ethical, and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. I have a terrific crop of 27 articles for you in this podcast. Note, sometimes companies are covered more than once, and now with so many articles to potentially cover, I've chosen 4 to quote from. Titles and links to the other 23 can be found on the web page for this podcast edition. I'm beginning this podcast with an article that reviews an industry that is controversial for some ethical and sustainable investors. Nonetheless, the sponsor of this industry analysis needs to be considered. The title of the article is Top 10 Sustainable Pharmaceutical Companies from sustainabilitymag.com. It's by David Weston. Here is some of his analysis. Here we present the pharmaceutical companies leading in corporate responsibility, innovation, and dedication to a healthier, increasingly sustainable future. Starting with number 10, Boston Scientific, founded 1979, headquarters Marlborough, US, net zero target 2050. In the short term, it aims to achieve a 46.2% absolute reduction in Scope 1 and 2 emissions by 2030, compared to a 2019 baseline. By 2050, it wants to achieve a 90% absolute reduction. Number 9 is United Health Group, founded in 1974, headquarters Eden Prairie, US, net zero target 2050. United Health Group is working to source 100% of its energy from renewable sources and reduce Scope 1 and 2 emissions by 60% by 2030. Number 8 is Danaher, founded 1969, headquarters Washington, D.C., U.S., net zero target 2050. Danaher's 2025 Scope 1 and 2 emissions were 30% lower than the 2021 baseline, with 70% of the electricity consumed in its operations drawn from renewable sources. 7. Elevance, founded 1944, headquarters Indianapolis, US, net zero target 2030. Elevance Health uses 100% renewable electricity and encourages suppliers to adopt science-based targets. Its initiatives include energy and water efficiency, responsible waste management, and low-carbon commuting. 6. Medtronic, founded 1949, HQ Minneapolis, US, net zero target 2045. Medtronic aims to have 75% of its suppliers backed by science-based targets by 2030. Medtronic also wants to reduce absolute Scope 1 and 2 greenhouse gas emissions 52% by fiscal year 2030 from a 2020 base year. 5. McKesson, founded 1833, headquarters Irving, US, net zero target, reduce direct greenhouse gas emissions by 50% by 2032. 4. Bayer, founded 1863, headquarters Leverkusen, Germany, net zero target before 2050. By the end of 2029, it targets a 42% reduction in Scope 1 and 2 emissions from a 2019 baseline. Strategies include transitioning to 100% renewable electricity. 3. CVS Health, founded 1963, headquarters Woonsocket, US, net zero target 2050. In 2021, CVS Health emerged as a global leader by securing SBTi validation for its net zero targets. The company is targeting 50% renewable electricity by 2040. 2. Herein, founded 2022, headquarters Weybridge, UK, net zero target 2040. Herein uses 100% renewable electricity across its production facilities. And 1, Thermo Fisher Scientific, founded 2006, headquarters Waltham, US, net zero target 2050. Thermo Fisher Scientific interim targets include a 50% reduction in greenhouse gas emissions from 2018 levels and 80% renewable energy use by 2030. End quotes. Now the case for green energy is clearer than ever, and this article offers reasons for it and what investments to look at. It's titled Riding the Green Wave, Clean Energy ETFs, benefiting from ETFtrends.com. It's by Ryan Schlosser, and here are some quotes from his article. Following a multi-year slump in clean energy ETF performance, geopolitical tensions sparking global energy security concerns, and energy demand from AI data center projects have driven clean energy investments in 2026. So we're starting with gains in 3 global clean energy ETFs. Number 1 is iShares Global Clean Energy ETF, tracks the performance of the S&P Global Clean Energy Index. The iShares Global Clean Energy ETF has climbed over 20% and has received inflows of $507 million so far in 2026. 2. Fidelity Clean Energy ETF tracks the Fidelity Clean Energy Index, targeting global companies that derive at least 50% of their revenues from renewable energy. The fund has seen a return of 17.3% and inflows of $60 million this year. 3. Invesco Global Clean Energy ETF follows the performance of the Wilder Hill New Energy Global Innovation Index. The Invesco Global Clean Energy ETF has climbed 19% and recorded inflows of $6.5 million in 2026. Now, capturing the North American energy shift are the following 4 funds. 1. Invesco Wilder Hill Clean Energy ETF tracks the Wilder Hill Clean Energy Index. The fund has climbed 20.6% this year, with outflows of $305.2 million as surging Treasury yields and potential interest rate hikes pressure smaller cap holdings. 2. First Trust Nasdaq Clean Edge Green Energy Index Fund tracks the Nasdaq Clean Edge Clean Energy Index, targeting North American companies across the green value chain. The fund has grown 27.2% this year and received inflows of $110 million. 3. ALPS, that's ALPS, Clean Energy ETF, and 4. The ALPS Electrification Infrastructure ETF. Both provide North American exposure to the clean energy sector. The ALPS Clean Energy ETF tracks the CIBC Atlas Clean Energy Index, focusing more on the electrification infrastructure component of the clean energy transition. The ALPS Electrification Infrastructure ETF tracks the Leidenberg-Thalmann Electrification Infrastructure Index, providing exposure to the companies physically supplying electricity and grid infrastructure. This year, the funds have returned 5.4% and 22.7%, with inflows of $12.8 million and $58.6 million, respectively. And 2 pure-play funds with exposure to solar and wind. 1. Invesco Solar ETF offers concentrated exposure to a portfolio of companies involved in the global solar value chain by tracking the MAC Global Solar Energy Index. 2. First Trust Global Wind Energy ETF tracks the ISE Clean Edge Global Wind Energy Index. The Invesco Solar ETF has returned 14.7% with inflows of $536.1 million in 2026, while the First Trust Global Wind Energy ETF has risen 21.8% and recorded inflows of $62.8 million over the same period. End quotes. Many ethical and sustainable investors are heavily invested in the AI sphere. So, as a homage to them, I have this recent article titled 3 AI Infrastructure Stocks That Could Double by 2027 from finance.yahoo.com. It's by Will Healy at Fool.com. Here's a bit of what he says in this article. 1. NVIDIA trades at a PE ratio of 31, which is actually less than the S&P 500 average of 32. This has occurred as NVIDIA's revenue grew by 85% yearly in the first quarter of fiscal 2027, ending April 26. When also considering the 211% profit increase for the same period, the earnings multiple would arguably appear low even if NVIDIA's stock price were to double. 2. CoreWeave, As one of the leading neo-cloud companies, CoreWeave has drawn increased attention. Amid the potential for massive stock gains, huge losses and rapidly rising debt levels have soured some investors on this company. CoreWeave has NVIDIA as an investor and a partner. That gives the company's capital and access to NVIDIA's latest technology, giving CoreWeave a competitive advantage. 3. Meta Platforms. Facebook parent Meta Platforms is in the process of transitioning into more of an AI-oriented enterprise. The company pledged to spend between $125 billion and $145 billion in capital expenditures, CAPEX, most of which will probably go to building more AI infrastructure. Indeed, the 26% forecasted revenue increase for 2026 is a slowdown from Q1. Nonetheless, that would put downward pressure on an already low price-earnings multiple ratio if the stock price stayed the same. Moreover, if Meta's AI inspired more confidence, its current valuation indicates the stock price could double without making Meta an expensive stock. End quotes. Lastly, I have this article covering a sector that most of you are concerned with. It's titled Top Wind Energy Stocks to Add to Your Portfolio for Solid Long-Term Returns from Zacks.com. It's by Avasek Bhattacharjee. Here are some quotes from his article. Note that this is an updated edition of the May 28, 2026 article. 1. NextEra Energy is a public utility holding company engaged in the generation, transmission, distribution, and sale of electric energy. The Zacks ranked number 2, that's a buy. Company's competitive energy business, NextEra Energy Resources LLC, is a leading generator of wind energy globally. 2. Duke Energy is a premier utility service provider offering efficient power and energy services. The Zacks ranked number 2 company is currently focused on expanding its scale of operations, implementing modern technologies at its facilities, as well as enhancing its renewable and generation portfolio by investing heavily in infrastructure and expansion projects. 3. American Electric Power is a public utility holding company which, through directly and indirectly owned subsidiaries, generates and transmits electricity. Wind forms a part of the company's broader strategy to diversify its generation portfolio and lower carbon costs. The Zacks ranked number 2 company is expanding its regulated renewable asset base. And number 4, Vestas Wind Systems is a renowned designer, manufacturer, installer, and service across the globe. To capitalize on rising demand for renewable power, the company emphasizes wind capacity expansion, technological advancement, and sustainable energy development. In June 2026, the Zacks ranked number 2 company secured 5 new orders to deliver wind turbines in Germany. End quotes. Now don't forget that I have titles and links to 23 more great articles showcasing sustainable and ESG-oriented companies and ETF picks on the webpage for this podcast edition. So these are my top news stories with the stock and fund tips for this podcast, July 2026 Sustainable Stock and ETF Picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. that helps bring these podcasts to others like you. And do click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these tumultuous times. Contact me if you have any questions. Thank you for listening. My next podcast will be on August 28th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.